I know we had some technical difficulty earlier.
I don't think I am screen sharing.
Oh, okay, very good. You're
Okay,
not anymore.
great. Well,
That's
thank you
good.
so much. And if anyone has additional questions, please feel free to follow up with me. If you don't have my email, Frank can share it with you,
Yeah.
or feel free to track me down.
Okay.
Thank you.
Thank you, Megan. All right, so I'm going to go ahead and share my screen here in a moment. And let me just ask anybody who can hear me, is that visible? Do you see it? Oh, I
Yeah,
see
good.
thumbs up.
Yes.
Thumbs up works. Thank you. Thank you, Mark. So I'm probably going to shorten this a little bit just to get us back on time, but this is preliminary results of research that I'm doing now for Cuyahoga County Council. Last year was the first year I engaged in a contract with County Council, and they are engaging a second contract for me to repeat this research this year. And the key facts about this is I'm basically looking at about 50,000 loan applications that were taken by banks in Cuyahoga County. There are three parts to this that I'm going to go through today. One is just some background on housing market and lending trends, because I think it's really important to understand the environment we're working in to really understand what's the impact of either having credit accessible or not. And the second part is, and after each part, I'm going to stop and ask if anybody has any questions. The second part is I'm going to be looking at the top 15 lenders in a variety of categories in Cuyahoga County. And then the third section I'll go into is looking specifically at 7 banks who have made pledges or community benefit agreements, basically pledging that they're going to improve their lending. And some of these go back 7 years. A few of them started these pledges in 2016. A couple of them have only made those pledges recently, but I'm looking at all 7 of those banks over the 7-year period. So also, before I also go any further, I want to make sure that I acknowledge, you'll see on this cover slide here, it says powered by Neo Can Do. Well, for those who don't know, and I know a lot of us do, this is the data system at Case Western Reserve University. They take the home mortgage disclosure data, which lots of researchers use, and they do something extra with it that is extremely valuable for me. They cross-reference each record with a geography that is not necessarily in the HMDA data. So east side of Cleveland, west side of Cleveland, Cleveland neighborhoods, those are things that are not in the HMDA data. It's generally by census tract. So it's incredibly valuable, the work that Case Western does to help me in providing this research. First thing is to note just a general trend of loan applications in 2022 across the country were down as interest rates increased in 2022. Now, locally, I'm going to show you what happened locally. It's a little bit nuanced here. The purple line is over the last 4 years looking at home refinance loans. And those were the most dramatic decrease. They had the most dramatic decrease from 2021 to 2022. The red are home purchase loans. They did decrease, but not as dramatically. And notice that the home repair loans actually didn't decrease. So these are the applications, excuse me. The applications did not decrease for home repair loans between 21 and 22. They actually increased some. Some other background on current housing market environment. And I think this first one is pretty important. In the east side of Cleveland, I know we've had this significant increase in median home sale prices throughout the county during COVID, and you've got a lot of people have seen their home values go up significantly. The east side of Cleveland is somewhat of an exception to that, although it is increasing. But the fuller context is that east side of Cleveland, the median price in 2005 was 80,000, and in 2022 it still hasn't recovered. It's still only recovered to 51,250. Now, the important thing here is that prices for homes in the east side of Cleveland significantly dropped but rents didn't drop. What did that mean then? What that meant was that investors from all over the country, and I should say actually all over the world, actually discovered Cleveland, or Cuyahoga County generally, Cleveland a little more specifically, and the East Side very specifically. And you can see the increase in business and investor acquisitions of properties over time from '04 through 2020. And in the year 2020, the last year of this data, 45%, almost one half of all properties that transferred in the east side of Cleveland were acquired by investors. I also want to note that this data was provided by Dr. Timothy Kobe at the Cleveland Building and Housing Department, and it's part of a study that VAPAC released in March of 2022. VAPAC is the acronym for a long name, the Vacant and Abandoned Property Action Council. An interesting quote from an investor: "The streets in Cleveland are paved in platinum because the houses are so cheap and the rents never declined." Lack of access. So what does this mean? How does this connect to lending? Lack of access to low dollar home purchase mortgages, those in the 50,000 or less range, and competition with cash paying investors who can pay cash for those properties undermines affordable homeownership opportunities. And here's a chart just showing how homeownership is declining in Cuyahoga County. This is over a 20-year period. The only area that's increasing is the outer suburbs. Most of the county homeownership is declining. As you'll see on the far right, the two areas where you have the greatest decline are the two areas that are majority African-American population. East side of Cleveland is 75% African-American. East inner suburbs is, I think, about 52%. So there are many homes on the market. Now, by the way, I'm using a slide that I used last year. I know this may annoy some people, but I still think it's an important piece of information. There are many homes on the market for under 100,000. These could and should be opportunities for affordable homeownership, but, and this is a statement from a loan officer, we don't make loans under 100,000. This is what Cleveland City Councilman Mike Polensek was told in 2022 when he went to a KeyBank branch in his Collinwood neighborhood to inquire about a home mortgage loan to purchase the home next door to his. Now, I want to be clear, I have no evidence or indication to suggest that KeyBank has a policy to do this, but clearly there's at least a loan officer who thought this was the policy, and I know that they didn't know they were talking to a Cleveland City Councilman, and that doesn't mean that if this is an issue, it's not just an issue with KeyBank. I think this happens to be a piece of evidence that has surfaced related to KeyBank. I think the problem is much greater than this, as you'll see in some of the data I'm going to show later. Now, here's something I believe I'm the only person that I know of who's doing home mortgage lending research who's ever done this particular analysis. This is comparing 1 to 3 family arm's length sales that take place, that's the red bars, with the green bars are the 1 to 4 family loans made. Now, you might say 1 to 3 to 1 to 4, is that a match? Is it apples and oranges? No, it's actually because 99% of all home sales in the county are 1 to 2 family. But notice what happens on the far right, the discrepancy between the 3,700 transfers of 1 to 3 family homes on the east side of Cleveland, again, where the median sale price is $51,000, only 927 loans. This is, to me, suggests a couple things. One, that there are these affordable homeownership opportunities that are being missed. And the second is we've got investors buying these properties. Now, another thing here is this is just looking at the east and west side of Cleveland. If you look at the home sale price trends, east side of Cleveland, well, let me note something earlier. Let's go back here to 2005. Notice that the east side and the west side was not that far apart. Even going back to 2000, they were not that different in their median home sale price until the foreclosure crisis, which targeted thousands of homes on the east side for subprime lending. I mean, subprime lending occurred everywhere, but the data suggests that it was much more prevalent on the east side of Cleveland and the predominantly Black communities. And you can see that what has happened is that the east side, everything is recovering, but the east side is recovering much slower than the west side. This represents a loss of wealth and value in the east side of Cleveland. Let me take questions. Anybody have any questions? I mean, oh, there is one in the chat. Let me see. Oh, it's just from Greg telling me we are ahead of schedule. Actually, I thought we were behind. Okay. If nobody has any questions, by the way, I'm going to continue. You can always come back to something if you want to. So let's look at specific lenders, the top 15 lenders by different categories and regions. The regions are that I'm looking at are countywide, of course, the global, and then Cleveland, east side of Cleveland and east inner suburbs, and particularly the east side and east inner, because those are where the traditionally underserved African-American populations are most prominent. The first one is home purchase in Cuyahoga County. And I'm, as somebody presenting, this is always, I feel bad about this because this is dense. When we get to the third part of the presentation, it's going to be a lot easier to follow. And I'm probably going to skip over some of this because it's so dense, but this is, and you will get this, this will be made available to you. I think it's going to be posted on the website, so you'll have this to digest in more detail. But the format here is that I'm looking at, on the left side, the applications, loans applied for, and the loans made. Then on the right side are the equivalent dollars, corresponding dollars that were applied for and dollars loaned. And they're ranked by the second column, which is the number of loans made. Cross-country mortgage is interesting because they've emerged over the last 6 years as one of the leading mortgage lenders. Third Federal has been a leading mortgage lender. Huntington, as you'll see when we get to the individual, the 7 banks that have CBA community benefits agreements, you'll see that Huntington has been growing as a leader over the last 7 years. And then, of course, Rocket, Howard Hanna is a major lender. I'm going to skip now to the next one, is looking just, this is narrowing in city of Cleveland only. It's still the same pattern, cross-country, Huntington, Third Federal. There's not too much difference there. By the way, I should mention, I'll go back to the first one for a moment. When you see the bold red, that's one of the 7 lenders who has entered into a community benefits agreement or a community benefits plan where they have pledged to do better in meeting underserved credit needs. Whenever you see the red. This is the city of Cleveland. The pattern is not too dissimilar. Now let's go to just the east side of Cleveland. Cross Country and Huntington are still at the top, so is Rocket Mortgage. You'll notice that we're getting into more of the independent, private, non-bank lenders like Kiavi Funding, United Wholesale, Fairway Independent, Union Home Mortgage, Ruoff Mortgage. One thing that I did do last year, and I don't have it done yet, and I'll again remind people, this is an unfinished piece of work. The final product for County Council will probably not be finished until late winter, early spring. But one thing that I noted last year, and I will do this again, is that some of these independent mortgage lenders are charging higher interest rates. And it's just something we need to keep our eye on, because in historically high interest rates are what led to the foreclosure crisis and all the defaults, vacancy, and abandonment that we had. And I don't think we're seeing that yet. And I don't think these interest rates are as high as they used to be, but that needs to be something we need to keep looking at. Here's the east inner suburbs. Again, the pattern is similar. Cross Country's at the top. Huntington is also at the top, so is Rocket Mortgage. Some of the CBA lenders are still in there in the top 15. Then I'm going to shift, and I'm going to keep moving in the interest of time, shifting to home improvement, home repair loans. The same for geographies. This is countywide. Huntington is a leader in home repair lending, and you'll see Third Federal is second. By the way, if you see something odd here, you'll see this CBA and CBNA year to date. I actually haven't quite figured out why this is the way it appears in the HMDA data. And I'm not going to actually go into the weeds and try to talk further about that right now. KeyBank is still a major countywide, a major home improvement lender, although as you'll notice in the next section, KeyBank had been actually far and away the highest home repair lender. They have dropped some, but they are still countywide a major home repair lender. Looking at just the city of Cleveland, now here Huntington and KeyBank are the top home repair lenders. Third Federal, got PNC, US Bank, and Fifth Third also. Going to the east side of Cleveland, Huntington and KeyBank are still the top lenders, but notice the number of loans is getting very small. One of the things that my observation is that there's a significant need for home repair. In fact, I would probably say that the east side of Cleveland has the greatest home repair loan need in the entire county. And this is in part based on 3 studies that I have at the footnote at the bottom, studies by the Western Reserve Land Conservancy, 2015, 18, and 2023, found that the east side of Cleveland had the greatest need for home repairs. So this really represents an unmet need to have loans, this smaller number of loans. The east inner suburbs, Huntington and Third Federal and KeyBank are the top lenders. I'm just going to keep moving in the interest of time. So this is just now looking at the same looking at top lenders, but the category is those that made small dollar home purchase loans. I'm still using $50,000 for this, although I am tempted. And the reason I'm still using $50,000 for this is because, as you noted earlier, I mentioned earlier, the median sale price on the east side of Cleveland is only $51,000 still. But looking at the east inner suburbs and other parts of the county, I think it does make sense for me to do another category, and that would be 100,000 or less. So I'm making more work for myself, but I think it's essential to keep the 50,000 for the east side in particular, but go to 100,000 to capture more of the need in the broader community. In this smaller category, it's generally a lot of the smaller independent mortgages, although you'll see that Huntington Bank is near the top in making these kind of loans. Amongst the CBA lenders, Fifth Third, PNC, and US Bank are in the top. This is countywide again. KeyBank, Chase, and US Bank, oh, excuse me, US Bank is, but KeyBank and Chase are not in this top group, at least not in the top 15. This is narrowing into the city of Cleveland. Fairway Independent again, and Huntington are the top lenders. Also notice, just as with home repair loans, notice how the small number of loans being made. And of course, the number of applications we could say is small. And we could have probably a long discussion about, are people discouraged? Why are they not applying more for these loans? Because as I showed you earlier, there were 3,700 transfers just in the east side alone. And where the median sale price is 50,000. So there is probably an issue of why are people not even applying as much? So when we go to the east side, this is the east side of Cleveland, and here the number of loans is even smaller. First Federal of Lakewood is at the top with 15, Cross Country 11, Huntington's 11. Huntington's numbers are coming down, as you'll see when I look at that a little more closely in a moment. Fifth Third. Let me just jump to the last one, the east inner suburbs. Fairway Independent, Union Home Mortgage. So a number of independent mortgage lenders. KeyBank is still high, but the numbers are very small. Now, here's something interesting. Why are the numbers small here in the east inner suburbs? I think it's a different reason than the east side of Cleveland. The east inner suburbs, and I have it in the note down at the bottom, the median sale price, this is part of the COVID-related explosion of home sale prices in 2022. The east inner suburbs has recovered, more than recovered, now has a median sale price of almost 130,000. So there are going to be less loans in that small dollar category. Now, the exception would be East Cleveland, possibly some parts of some of the east inner suburbs that are still struggling. But by and large, there just aren't as many transfers taking place at 50,000 or less, where there are still on the east side of Cleveland. Let me stop for questions, and I see that there already are some questions. Let me look at this. There's a question about the CRS Heritage Home Loan. That's excuse me. My mind's drawing a blank on what CRS stand for, other than Restoration Society, Cleveland Restoration Society, pardon me. Their Heritage Home Repair Loan figures, how does that figure into KeyBank and Third Federal numbers? Well, I don't have a way of pulling those out. I wouldn't mind doing an analysis to look at that. I think that would be informative, but the data doesn't give me the ability to pull out what were the loans that KeyBank and Third Federal did in conjunction with Cleveland Restoration Society. So I'm sorry that I don't have a good answer for that. Let's see. What about loans by local credit unions? Well, you know, I'll confess, I could do that, but I haven't done that. I haven't looked at credit unions as a separate type of institution. And since this is being recorded, I am planning to review all this conversation, and I will make a note to see whether I can fit this in. A lot of it has to do with just how much time do I have, how much can I get done. But I think it's a good question. I think it's a valid question, because if we find that credit unions are in fact doing a better job of meeting credit needs, then maybe we should be thinking about how do we maximize that. Another question here, let's see, just continue to scroll down through the chat. Would financing decisions applied for and made through or authorized by Cleveland Housing Network? Yeah. So yes, that's an interesting question, because CHN Housing Partners, starting in, I believe it might be the first year was 2022, their CDFI, Community Development Financial Institution, is, I think, it's commendable that they're trying to help meet some of this need. What I don't know yet is, what does it mean, for example, if CHN partners with a lender? Does that mean that CHN's lending activity then enhances what that lender was already doing? Or does that lender view CHN's partnership as replacing something that they don't have to do anything about anymore? And certainly the low dollar $50,000 category is important there. And I think it's commendable that CHN has this program. So I'm not knocking CHN, but I am posing a question that we need to keep our eyes on. I don't think what we want is for lenders to say, oh, that's like saying, I gave it the office, I don't need to make a contribution to something. Bad analogy, but I think what we want is to continue high expectations of what banks will do and mortgage lenders will do in meeting credit needs, and then view programs that CDFIs have as something extra on top of that to further meet unmet needs. That's my editorial comment. And then from who's monitoring the CBA agreements these days? Well, that's an interesting question too. Most of these CBA agreements are national and entered into with the National Community Reinvestment Coalition, although in some cases, these are not agreements. And 2 or 3 of the 7, they're simply pledges that banks have made, whereas some of the original ones were actual agreements with the National Community Reinvestment Coalition, NCRC. And actually, I guess it's worth noting, NCRC actually ended their agreement with KeyBank, which they'd had for a number of years because they were not happy about KeyBank's performance. Now, last year when I did my report on this, I noted that my findings were not as severe, that I did not find the same, I found some challenges with KeyBank, but I didn't find the exact same, what NCRC was finding nationally, I didn't think it was that bad. They basically said that KeyBank was the worst lender for African-American borrowers. Blunt statement on a national level. I would not make that statement. And I did not make that statement. Let's see. Did I answer Tony's CBA question above? Who is monitoring the CBAs? Well, I think I have by saying that the monitoring, if it's an agreement, if it's an actual agreement, not just a pledge, then it's something that the NCRC, National Community Reinvestment Coalition, is monitoring. Although my concern about their monitoring is they don't go down to the level that I've been just showing you, and I'm going to be showing you more of in a few minutes. They're not going down to the east side of Cleveland and saying what's happening. That's the problem with those national agreements. And that's really, if there's a major reason why am I even doing this research, it's because nobody else is looking at it down at the level of our local communities. Let's see, that might be helpful to remind the audience about the size of holdings. Yes, that's a good point. So I am going to be doing an analysis of deposits. I haven't done that yet. I did it last year. KeyBank is, of course, the largest depository bank. They're holding the most deposits from Greater Cleveland. And so there should be an expectation that with larger deposits, they should have the resources to make loans. And well, there's really quite a few questions here, but I'm also seeing that I'm running out of time because I'm getting a message that there's limited time left. And I want to get to this last section. The one question though, is it should be noted the city of Cleveland has ever since, I think 1991, Mike White, when he was mayor, Cleveland was the first city in the country to enter into bank deposit agreements with local banks where they said, if you want our city money, you need to give us something in return. You need to show that you're making investments and making loans in our community. So Cleveland led the way on that. But then over the years, Cleveland sort of dropped the ball. The Bibb administration is picking that up. And they are currently, as I understand it, looking at engaging some banks to have deposit agreements that would require meeting credit needs. So, I mean, but that's something that, need to continue exploring that. So here's the thing that may be the most interesting and the easiest to digest. 7-year analysis of the 7 lenders with CBA agreements. Here are the agreements, by the way, the older agreements. Fifth Third, 32 billion, started in 2016. KeyBank, 16 billion, started in 2017. Huntington, 16 billion, started in 2017. And those have all been extended. More recent agreements, Chase Bank, 30 billion, started in 2021, PNC, 2022, Bank of America in 2022, and then US Bank's the most recent in 2023. These are all multi-state agreements. This is not Cuyahoga County, not Ohio. Although they're not necessarily 50 states. That they've defined their markets. In some cases, they might be a dozen states. In addition to being a CBA lender, it should be noted that KeyBank has had the contract with the county for the last 4 years for banking services. This is equivalent to what I was just saying with the city of Cleveland is about to re-engage and look at depositories that are taking city money. The county has been engaged with KeyBank, and that agreement expires March 31st of 2024. The county is currently reviewing proposals from banks to enter into that next contract starting April 1st, 2024. So let's look at home purchase lendings. These are the 7 lenders. The thing that stands out is, now again, keep in mind, these are lenders who've actually either entered into agreements, said, we're going to do better. Although note in some cases that some of these lenders did not make those agreements until more recently. But Huntington, Fifth Third, and KeyBank, their agreements go back to 2016, 2017. The things that stand out is that Huntington countywide clearly has increased their lending. Now, should also note, you notice there's a decrease in a lot of these in the last year. Well, let's go back to the very beginning when I said that interest rates in 2022 caused a decline in applications. This decline in loans is directly proportional to Huntington's decline in applications. The same with Fifth Third and KeyBank and other banks here. So this decline is understandable given the lack of applications. However, the overall trend, which is disappointing here, is that Fifth Third, which entered into its agreement back in 2016 or 2017 and said, we're going to do better. I mean, this is why it's important to be looking at this locally, not just on a like 15 state broad view, because I know that all the lenders in their national agreements said we've met our goals. Fifth Third has declined in its home purchase lending consistently throughout the entire period of the 7 years. Of course, this last period is partially explained by the drop in applications. I'm going to go to the city of Cleveland. The pattern is the same here. Huntington is at the top. It's worth noting that in the city of Cleveland, KeyBank had started at only 22 loans. They ended with 90. So while their numbers, all amongst the 7 CBA lenders, none of them are at the level of Huntington. Some of them actually have made improvements, and KeyBank certainly did. It's almost a 4-fold improvement in their lending in Cleveland. East side of Cleveland, again, the numbers get smaller. The pattern is similar. Huntington is the top lender. There is some decline from some of them in the last year, although I noticed, interestingly enough, that PNC did not decline in the last year. These numbers are small, and I think suggest there's an unmet need. Look at the east inner suburbs, similar pattern. Huntington is leading amongst the 7 CBA lenders. Some of the others, there's been modest increases, but in some cases, some of them have not made much improvement. But then also let's note that some of these lenders did not make their commitment until 2021 or 2022. So we might see what happens over the next couple of years going forward. Home repair lending, looking at the same things. This is countywide. Now, the most interesting thing here is that KeyBank in 2016 had been by and far the leading home repair lender. I mean, way above everybody else. And they have declined. But notice in the last 2 years, they're starting to come back up. So that's good for KeyBank. Huntington started with only 94 loans. They've ended with 673. That's a dramatic increase in home repair lending countywide. In the interest of time, I'm going to keep going. I'm going to look at Cleveland. Interestingly, here you've got, again, KeyBank has dropped some, but has come back quite a bit. And while Huntington increased, KeyBank and Huntington are actually pretty much very close in terms of meeting home repair loans, their production anyway. In the city of Cleveland, I'm going to go to east side of Cleveland. Here, Huntington and KeyBank are still at the top with the most home repair loans. But again, notice the small number of home repair loans. There's definitely an unmet need here of home repair lending on the east side of Cleveland. East inner suburbs, similar. KeyBank and Huntington are amongst the 7 CBA lenders. They're doing the best. The others, again, there's some upward movement. Looks like PNC again has, they were the 3rd highest amongst the 7 CBA lenders. Then finally, I'm going to look at the loans 50,000 or less. So the sad thing is here, that's been declining for everybody, which is very disappointing. And now you could say some of that, this is countywide, some of that is because between 2020 and 2022, we had home sale prices increase in parts of the county, in much of the county, to where there are fewer $50,000 loans. And so you could say, well, that might explain part of it. As we go to the city of Cleveland, excuse me, this is where you're getting, certainly in the city of Cleveland, which includes the east side of Cleveland, there are a lot of homes selling for 50,000 or less. I find it disappointing that Huntington's numbers are dropping as they are, in particular, having been so high. And if we go to the east side of Cleveland, now again, this is east side of Cleveland where the median sale price in 2022 was 51,000. So there were a lot of affordable home ownership opportunities in the east side of Cleveland in 2022. And you can see the numbers are incredibly small. And part of this could be banks not wanting to make those loans. I mean, if we think about it, loan officers are paid by commission typically. Do they want to work on a $45,000 home sale or a $245,000 home sale? And then the other part of it is you've got investors who can pay $45,000 in cash for that property. Let's see, east inner suburbs. Again, the numbers are very low, but here, as I've said before, I think the explanation for the numbers being low in the east inner suburbs really is because the home sale prices are significantly increased, and there's just not going to be that many 50,000 or less home sales, except again for East Cleveland and possibly some other pockets in the east inner suburbs. And I want to see where I'm at. Oh, okay. And time-wise, we're at 9:26. Greg, can I ask you, how much time do we have?
15 minutes.
Okay, well, then let me go to the questions and see what we have. So a question, do I feel that banks are meeting needs for home repairs throughout the county? No. But that's the answer to there is a little bit nuanced because the stronger statement would be the unmet need in the east side of Cleveland and some of the east inner suburbs. Without question, the east side of Cleveland, and it's fairly well documented because of the surveys that were done by the Western Reserve Land Conservancy in 2015, 2018, and just last year, clearly show that the east side of Cleveland has a greater need for home repair. And by home repair, let me distinguish this. I'm not talking about homes that need to be demolished, that need to have 150,000 in renovation. They're completely bombed out. I'm talking about what would be considered B-rated and C-rated properties that need roof repairs, they need porch repairs, gutters, things like that. So we're talking about something that's doable, but that's probably the greatest unmet need. Let me just go to the next question. Tony, I'm going to skip your. I see that you served on the CRA committee with Donna Kelsey. Wait a minute, is that the same Kelsey that Travis? The Kelsey.
I'm a Swiftie, so yeah,
right.
That's the same one.
So the Kelsey family, which is from Cleveland Heights. Okay, a little moment of levity here, which we need some levity because this is a dry subject. Looking at data has got to be the most driest thing to do. Let's see, with Key offering 2% for renovation homes for Heritage Home, will be interesting to see how numbers move with overall increased rates. Yeah, that's a good point. I do think I'm glad that somebody raised the question about the Heritage Home Loan Program, because although I don't have access to it, maybe there's a way to get access to that data. Or maybe the people that should be asking for the data is the city of Cleveland, as they're negotiating, looking to banks that are applying to be their depository, and maybe the county who's looking to engage with a new depository, or could be a repeat with KeyBank again, but they're looking to engage in agreement. And I think the city and the county could ask banks, give us those numbers that are not readily available in the home mortgage disclosure data. That would be very helpful. Well, we may have, I'm fine if there are no more questions. I'm exhausted, just trying to make sure I get through this quickly. But so Greg, let me just check in with you. How are we doing with time?
You have just a little over 10 minutes to get the rest of your content.
It wouldn't hurt us to actually get ahead because we're likely to get behind from something else. Trying to think if there's anything else I could say. I suppose I'll just repeat for anybody who missed it. while I've been doing this research for, I guess it goes back at least 7 years now, and was always doing it as just sort of an add-on to work that I did. Last year, I was very grateful that through Councilwoman Cheryl Stevens, through her leadership, County Council decided to engage me to do this research, and they have engaged me again to do it. The final product of this research will probably be, as I said, late winter, certainly probably by March, if not even sooner. And the things that are undone that I still plan to do, I'm still going to do more analysis looking specifically at African American borrowers, have a separate set of tables and charts for that. Looking at low to moderate income borrowers, a separate set of charts for that. Looking at deposits, which banks are holding deposits in the county and which are then reloaning those deposits back into communities. Those are things that I did last year, and I will be repeating that. I just haven't got those done yet in time for this presentation. So I think that's it. I think that if there's no further questions, then I think what we should do is simply, Greg, unless you need me to fill time here, because I could do that. Or
There were 2 more questions, Frank.
Oh, I'm sorry, I didn't see them. Let me go, hold on a second. Oh, yes, I missed that. Have I seen an increase or an impact in rising loan rates from historical lows to the number of sales? I haven't seen it, but it's only because I haven't really delved into it. So it's not that there could be something there that is more obvious than, of course, I noted that there's the decrease in applications and decrease in loans in 2022 due to rising interest rates. I haven't looked at that from an historical point of view, and I'm adding things to a to-do list when these things get added, and sometimes very important things surface. And I did explain to the county that the reason I wanted to present this as preliminary was because this will inform and make the product I give to the county even better by getting these kind of questions. So I will add that to my to-do list, see if I can get to that. This last question here, besides decisions by individual employees, what are the reasons for avoiding loans below 100,000? Well, there might be a couple things. There's a separate thing which is somewhat technical. The federal regulators a number of years ago, coming out of the foreclosure crisis, where we had all these high interest subprime loans going to borrowers and then ending up in foreclosure, the regulators were penalizing lenders who gave loans that were considered high cost. Now, high cost wouldn't just necessarily be the interest rate being high. It could also be other fees that are tacked on, and then it's high cost in proportion to what is the loan amount. So you could have a loan amount of 200,000, and the interest rate is slightly high, and there are some fees. But in proportion to the 200,000, it doesn't look like a high cost loan. But then you take a $40,000 loan on the east side of Cleveland for a $45,000 home sale, and you tack on the interest and the fees. All of a sudden, the proportion of that extra, all that stuff, then it bumps it into this category of a high cost loan. And the regulators, the banks have been concerned that we're getting dinged by our regulators. So there could be another reason. I think there's at least 2 that are out there. Now, one of the things that housing advocates proposed in response to this was, could lenders have some special program for these underserved communities where they reduce the fees and possibly the interest rates to avoid having these homes be categorized as high cost transactions. And then the other thing that was considered, and it's been adopted, I believe, by Huntington and a couple other banks, that special programs for loan officers where the loan officer is paid a floor or a base commission, assuming that the loan is 100,000, even if it isn't. So a $45,000 loan, the loan officer gets a commission equivalent to 100 or 120,000. I don't know the specifics about which lenders are doing that, but I know that some have said that they are starting to do that to try to alleviate that problem. Is that the last question? So I think it is. Greg, I think I'm going to turn it back over to, well, who are we turning it over to here?
We are into the break
We're
now.
taking a break. Okay, not turning it over to anybody. Well, thanks everybody for listening, and thank you for the input.